Welcome to Investors Insights. Our topic today is behind the scenes. I am joined today by my colleagues Bobby Norman, Trey Booth, and Ashley Page. We've had a great discussion this morning and chose the topic behind the scenes. And I'm reminded of the Wizard of Oz, in which you had to pull back the curtain to see who the wizard really is. In this market environment where everything seems so bullish at this point, as we've seen a strong market, we also like to go behind the scenes to really look at the facts. Right now, there are many stocks that are down as much as 20% this year. I can also quote from the standpoint that airlines are down about 52% year to date, banks down 33%, energy down 32% as a sector, autos down 30% as a sector, consumer finance down 27% as a sector, and utilities down 5%. And yet here we are seeing the strength of a market in which people are saying the Fed is your friend, don't fight the trend. There's a lot of positives out there. So we want to take you behind the scenes to see how that impacts your portfolio in relation to all the economic news that's going on. So is it as good as it seems, or is it as bad as it's going to get? That'll be one of the questions we're debating today. So on that note, Bobby, I'm going to start off with you because of the fact you talked about the jobs information. Everybody's all excited about jobs. So let's give an example here. We had some of the airline stocks actually start to rally on Friday while simultaneously laying people off. Well, if those people are being laid off, that's a consumer that's not going to be spending money later this year. Talk about that.
Yeah, Greg, we saw a great surprise in the economy added 2.5 million jobs when the expectation was a decline of 8 million. So to be up 2.5 million was a great surprise. I don't think there's an employment analyst on the planet who saw that coming. So
I agree.
It was good news in that the market and portfolios were up last week. But as investment managers, we don't just look at the headlines. We read and analyze the full report. And if you analyze the full report, there are some concerns. Look, it's not all good. Unemployment rate is still 13.3%. We're still 19.5 million jobs below where we were before the virus started. And then one point of concern is the layoffs we're seeing at the local government, state and local government level. And so the government laid off 571,000 jobs, and we expect that to get worse. And that's a nationwide problem because state and local governments are the largest employers in the nation. And so you still have a long way to go, but the report showed that the massive monetary and fiscal stimulus helped the recovery. But now the conversation turns to, will the quick recovery cause Congress to do less and hold back on further stimulus that the market might be anticipating? So that we're looking at that very carefully, but certainly reasons to be cheerful, but caution is warranted if you look at the full report.
No, that's well said. And in addition to that, with the economy slowing down, state and local governments are not going to have the tax revenues that they've been used to getting. And so that in turn will also determine if they're going to have hiring or laying more people off.
Yeah, definitely. And also something that was interesting to Bobby's point about where the jobs came from, we did see an average hourly earnings go down. And so that indicates that it was lower paying jobs. And from an economic standpoint, that's great to see people come back to work. From a market standpoint, you need to see higher paying jobs where people have the ability to save excess earnings and then invest in the market. And so while economically it's good to see jobs come back, we really want to start seeing the wages really go back up to where they were.
No, well said, Trey, and I appreciate you interjecting that. And in our meeting earlier this morning, you and Ashley went back and forth. And Ashley, talk about on the government job side as well, what you pointed out.
Absolutely, Greg. To Bobby's point, the Federal Reserve is trying to keep that government employment from being the problem that Bobby just pointed out. Last Wednesday, they opened up a lot more bond buying across all 50 states. And in essence, they said for each state government can choose a municipality, a county, some combination there, where the Federal Reserve will go in and do direct buying from that municipality or that county government. Well, that will really help because to your point, Greg, a lot of these payrolls too in government are really off because the tax revenue's not coming in. So, where we saw a lot of push on the employment side from the CARES Act on owner managed businesses, now we're needing kind of to turn into this government help because government employment is 16.7% of our economy,
Right.
and it's over 20% in 9 states, including our home state of Alabama. So it's significant.
Yeah, and if those people aren't working, and that's what we're tracking here, it's one thing to say, hey, people have been rehired. At the same time, though, you've got other people being laid off or downsizing is taking place, and that's consumers that won't be in the market spending money here shortly. And in addition to that, the programs that the government has done so far, a lot of them end in July.
Right.
In terms of unemployment and those kind of things. So, with that said, in addition to that, that consumer needs to fill up their car with gas. And Trey, you brought up something which has an impact on all economies and is almost like a tax within itself. If oil prices go up, gasoline prices go up. Here we are in the summer months, people talking about traveling. Travel and entertainment's already been crushed in terms of jobs there. But talk about OPEC and gasoline prices, oil prices for just a minute.
Yeah, so we mentioned this last week that OPEC Plus, which is the OPEC countries plus Russia, we're going to meet on Thursday, and they came out with the decision to extend the production cuts of 9.6 million barrels a day through the end of July, which, to Greg's point, interesting timing that cliff point where they have to decide to extend or end their production cuts coincides with a lot of the end point for the stimulus in the U.S. economy. So when we look at weekly data, we're just starting to see miles driven and gas being used to increase right at a time where now, because of these cuts by OPEC, we'll see price of oil to rise. Now that will help the U.S. energy sector, which is, as Greg pointed out at the top of the vlog, has definitely been hurt year to date. But that has become a very small portion of the economy because it has shrunk so much over the last year. So the risk reward benefit of the U.S. economy of lower gas prices during the summer travel season, we'll likely see less travel, but still more travel than we do see in other months of the year. To see gas prices go up right when people are trying to get back out of their house, right when they're trying to maybe consider traveling, right when they're starting to drive maybe to work or to restaurants or to pick up to-go orders, to see those gas prices, which have been heavily depressed for the last few months, to rise just in time for people to start using it, may have a negative effect on the economy and how consumers use the savings they've built over the last few months, and something that will bear watching. And I don't want to circle back to the employment data again, but to Greg's point, a lot of this is stimulative from the government that we expect to end in July, which may explain why over 2 million of the 2.5 million jobs added were leisure and hospitality and temporary jobs at lower wages. We saw month over month nearly 300,000 of additional permanent, what are listed as permanent job losses. So it's interesting to see the dichotomy between temporary and permanent. We saw temporary jobs, the 2.5 million jobs added, while the number of permanent job losses also increased. That's something that is going to have to come to a head at some point. And maybe it'll have to happen in July when either stimulus is extended or it's ended. So something we're going to be watching closely. But that July end date is starting to build up a lot of capacity from energy cuts to stimulus to the peak of summer driving and consumption. That's going to become a very maybe a fulcrum point or a key point to watch economically.
Yeah, very, very much so, and that was well said, Trey. And let me just emphasize here what you've heard here today is that in the strength of this market that we're seeing, there's still a lot of laggers and sectors that are not performing well. And it's a select few that we're seeing take the market up, and there's other industries that are having to reinvent themselves, rethink how they're going to make their earnings, and in addition to that, what kind of personnel do they need working with them? The tech sector is already indicating, from the standpoint of having more people that work for them work from home. If they work from home, they're going to have less need to fill up that car, to get on that train, to get mass transit, to go to that commercial real estate. So we're watching all of this closely, and we're going to keep you updated because at the end of the day, Consumer spending determines earnings, which in turn determines solid stock prices, solid equity prices. And in addition to that, in the coming weeks, we're going to focus with you as well on interest rates. It's great where we can get a mortgage at right now, but at times the bond market can project future things to come based on those interest rates. So please make sure that you continue to watch this vlog, that you continue to follow us on the social media. You need to know we're going to continue to communicate with you in multiple ways through phone calls, in-person meetings, virtual meetings. We're doing a lot of those. And we want to make sure that we're helping you see behind the scenes to understand why we make the decisions and give the advice that we do here at Five Plan Partners. We hope you have a great week. We want everyone watching this vlog to have a great summer. And at the same time, though, just know that we're in a summer where we've got to keep an eye on things, and we're going to continue to pull back the curtain, look behind the scenes, and make sure that you're updated on what's actually taking place. Have a great week. Talk soon.